Assalamualaikum and hi everyone. We are from JAC2205B. We are going to present on the topic of Consolidated Fund. My name is SITI NURHALIZA binti MAZLAN and the other presenter is FATIN AFIQAH binti KHAIRUL ANUAR, YUSRINA binti JUNAIDEK and SYAZWANI binti SHAFARI. Definition of fund accounting. A fiscal and accounting entity with a self-balancing set of accounts, according cash and other financial resources together with all related liabilities and residual equities or balance and change therein which are segregated for the purpose of carrying on specific activities or attaining certain objectives in accordance with special regulation, restriction or limitation. Objective of fund accounting. First, to determine the financial position and its change in the organization, to know the result of the operation of the organization, and to check its compliance with legal restrictions. Characteristic of fund accounting. Each fund is an independent accounting entity. Each fund has its own set of accounts with complete double entry and financial statement. Each fund must be self-balancing and autonomous. Next, regulatory framework of consolidated fund. The establishment of consolidated fund is governed by the Federal Constitution and the Financial Procedure Act 1957. Government Accounting Standard PPK had been set up by the Accountant General Department since the year 2002. There are three PPKs related to consolidated fund, which is PPK No. 3 Consolidated Revenue Account, PPK No. 4 Consolidated Trust Account, and the last one PPK No. 5 Consolidated Loan Account. Consolidated Revenue Account. In Section 7, Subsection A of Financial Procedure Act 1957, all types of money or revenue received except for loan and trust are to be accounted for in the Consolidated Revenue Account. These monies are used to maintain operating expenditure which include charge expenditure in Article 98 Federal Constitution and supply expenditure in Article 100 of Federal Constitution. There are four types of revenue. The first one is tax revenue, non-tax revenue, other receipt, and last, revenue from federal state entities.
I am FATIN AFIQAH binti ANUAR. I will present on Consolidated Trust Account. So, what is about? Consolidated Trust Account is established to account for or receive and payment of trust fund and monies received by the government for specific purpose, as specified in Section 7 Sub C of Financial Procedure Act 1957. Government Trust Fund. In accordance Section 10 of Financial Procedure Act 1957, Sub Act SITI 1, Government Trust Fund account for receipt from government allocation and payment for specific trust purpose. The three types of the Government Trust Fund: first, Development Fund; second, Housing Loan Fund; and third, Miscellaneous Government Trust Fund. Development Fund is a trust fund set up in accordance Development Fund Act 1966, Sub Act 406, with the key aim for the economic development of the nation. Receipt for this fund consists loan for purpose of development, contribution from Consolidated Revenue Account, and repayment of loan given out from this fund. Transfer from the Consolidated Loan Account represent the main sources of finance to the Development Fund. Housing Loans Fund. The Government Housing Loan Scheme is financed by Housing Loan Fund in accordance with provision of Housing Loan Fund Act 1971, Sub Act 42, with the fund aims to provide housing loan facilities to the member. Receipt of Housing Loans Fund, Consolidated Revenue Account and Development Fund. Proceed from loans raised through transfer from loan account, housing loan repayment, and interest earned.
Miscellaneous Government Trust Fund is established under Section 10 of Financial Procedure Act 1957, Sub Act 61, with this trust fund account for specific trust purpose. Financial sources of this fund is from appropriation from the government. The five main categories are clearance account, trading account, loan account, contingency fund, and miscellaneous fund.
Public Trust Fund. Financial sources of this fund are received from organization or individual for specific purpose. Deposit consists of general deposit and adjustment deposit. General deposit is money received for specific purpose by the federal government for a specific purpose under any law or contractual agreement, and they need to be reimbursed when the purpose is achieved. While adjustment deposit is temporary account used before payment are made or adjustment are made to specific account.
Next, I will present about Consolidated Loan Account, instrument for internal borrowing. There are four types of domestic loans instrument. Firstly, Malaysian government securities, treasury bills, government investment issues, and sukuk. Malaysian government securities represent the main source of domestic borrowing, and they are in the form of bonds issued on a long-term basis to finance federal government expenditure. They are registered stock made available to the market by tender and are managed by Bank Negara Malaysia. The maturity period is between 5 and 20 years. The major subscribers of NHS issued are Petronas, EPF, Bank Negara Malaysia and Bank Simpanan Nasional. Treasury bills comprise of short-term loan instruments issued by the government periodically to finance the redemption cost of matured bills. The maturity period is between 91 and 365 days. The main subscribers of treasury bills are commercial banks and discount houses. Government investment issues aim to meet the demand for government papers based on Islamic principle. Government investment issues are medium-term loan instruments with the maturity period between 1 and 8 years. The main subscribers of these investment issues are Bank Islamic Malaysia Berhad, Sukuk and Arabic Bank for financial certificate. Sukuk commonly refers to the Islamic equivalent of bonds. Financial assets that comply with the Islamic law can be classified in accordance with their tradability and non-tradability in the secondary market. The government of Malaysia had enacted the Government Funding Act 1983 with the aim to enable the issuance of instruments that could serve as liquidity management tools for the Islamic Bank through issuance of Sharia Compliance Government Investment Certificate (GIC).
The last topic for consolidated loan account is instruments for external borrowing. External borrowing raised by federal government from sources outside the country. World Bank defines external loan as those loans which have original or extended maturity or more than 1 year owed to non-residents and which are returnable in foreign currency, goods and services. Based on the External Loan Act 1963, Act 403, the limit of borrowing is 35 billion. External loan consists of market loan, project loans and wakalah global sukuk. The first instrument of external loan is market loan. Market loans are regulated under the External Loan Act 1963. It covers the loan obtained from international financial institutions which are negotiated at common market rates raised for general purpose. Market loan. The first one is syndicated loan. It is a form of loan from a group of registered foreign banks, and the maturity period is 10 years. The second one is bond issue. It was a loan provided on an IOU method. The issue price is determined by market conditions of demand and supply. The maturity period of bond issue is 5 to 15 years. The third one is floating rate notes. It is interest payable is calculated based on the floating rate, and the maturity period is 10 to 20 years. The second instrument of external loan is project loan. Project loans are borrowing by way of money, services, and technical studies, which are secured for specific development projects. It can be obtained both from multilateral and bilateral government sources. The last instrument of external loan is wakalah global sukuk. It is one form of external borrowing for the Malaysian government to continue support its prudent debt management practice. It is said by Malaysia International Islamic Finance Centre that the wakalah global sukuk is Malaysia's third USD-denominated sovereign sukuk issuance. The wakalah global sukuk is the first 10-year global, and it established a new benchmark in the Islamic capital market.